Okay, let's move on to the audit.
Audit. Well, since there's not enough time left, I think we should table it. Let's answer some questions. We had...
Does Pam need to stay now?
Yeah.
She's going to stay because we have hiring.
We got a lot of stuff we got to go through.
Oh, sorry, Pam.
Well, thank you for being so considerate.
Laura, earlier you said we shouldn't be asking to dismiss my employees, and now you want to dismiss my
I'm
employees.
trying to get rid of people. That
Even
don't
Bob
stay here.
Skolnick's leaving.
You trying to get rid of people?
Oh, my God.
The audit, we met as a finance council. We went through the series of questions that the board and Mr. Walsh had a majority of those questions. We went through them as a group. Tim provided some answers in your packet. I'm not sure if we totally answered everything or if we have some closure on this, so how would you like me to proceed? Do you want to have Tim go through the questions, or Tim meaning Tim McGinnis, or
Well,
do you want...
Let me just say for the record, I've got concerns. I don't understand, and we got 2 accountants on our finance committee. There's a difference between doing an accrual and having auditors show what an accrual would have done had we done it. And there's a difference between what it says in the audit report, like on our investment policy, and interpreting what the investment policy says, because we're different than other schools. And I talked to Kevin today, and I know at least in one question that's why I don't want, it's like, well, everybody else does it that way. And again, maybe this seems like a stupid analogy, but if 20 cars are driving 60 miles an hour down the street, the police can pull them all over, and you can't say everybody else is doing it that way, because there's a rule to follow. And I'm struggling with, what are the rules, and are we following them? And right now, our company, which is a $5 billion corporation, I spent at least some time every day for the last 3 weeks, because Deloitte & Touche is auditing something I work on. They're not reaccruing. They're finding out, did we do it right? And that's what auditors are supposed to do. Did we do it right? And again, maybe there's some difference with government to do. There's the 2 different formatting. And if the auditor's not looking and saying, did we do it right? Then it raises the question is, are they doing their job right, and do we have good controls? And I said to Kevin, when I went back into some of these, looking at numbers or something, and I highlighted some other ones, again, when I look at a report and it's got historical numbers and it doesn't match what we already approved, I kind of stop. I say, it's either right or it's wrong. You can't change historical numbers. So we spent a lot of time on this. And maybe I'm the only one who's got a concern about it. And that's if 4 of you want to say, let's not do it, we'll talk about it, fine. But in my mind, it's unclear whether we do accrual accounting. And the rules, I provided the rules. It doesn't say if you're with the county treasurer, you could do it a different way. It says you accrue. I provided the information to Kevin from his own district he came from, where they showed how they switched from cash to accrual and how it affected the books. And again, they don't use the county treasurer apparently. Well, I mean, to me, it's a simple thing. You could just use teacher salaries. And it's an example in the state board's book on accounting. If you accrue teachers, if the teachers are getting paid for the whole summer and you're accruing it, at June 30th you accrue for the current year the salaries that are paid in the rest of the summer. Now either we do it or we don't. And if we don't, I don't see how we can say we accrue it. And the rule also says if you switch from accrual to cash, you have to get, forget if it's the ISB, the state board, or the regional, to approve that. So, my concern is, we're on the 3rd time of, in my mind, kind of asking the same questions. And, so we seem to have big concerns about how we account as a board for certain things. Still people concerned about how we accounted for a building years ago. And I'm concerned of whether we're doing our daily activity correct. And again, it's not to, fault people for how they're doing it, and if that's how people are doing it, but, the one example, I'll give the other example. It's the, what's IMRF, right?
Yeah.
Whether we have to show that as a pass-through. I don't know if we do, I don't know if we don't. I know the auditor said we do.
TRS, yeah.
I'm sorry, TRS, thank you. The auditor said we do. Either he's wrong, in which case we should find some site to say, he's wrong, we don't have to do it, or he's right, and then we have to do it, even if it's stupid. I mean, there's a lot of regulations we don't maybe agree with, or maybe haven't paid attention, and it's no different in the school than the company I work for. Lots of regulations. Sometimes you bang your head against the wall saying, why did they ever come up with that idea? But if that's the way it's supposed to be done, we should do it. And I think it's important that we follow the rules. I don't care if it's about accounting, teachers, students, safety, parking, whatever it is. We should be a compliant group. And again, I talked to Kevin today. Apparently, maybe the finance council thinks it's fine the way it is. And if four of you want to say drop it, drop it.
Then ask the finance council, what do you guys have to say?
Well, at this point, I really hesitate to speak up because every time I try to speak up on these topics, I get the response that, well, that's not my point, or that's not what I'm trying to relay.
Right.
Each month we approve bills that are going out the door or on the impress fund have gone out the door. That's a cash basis item. The next month we get a budget report that comes out of the treasurer's office. That's a cash basis item. And we do that every month. Cash basis, cash basis, cash basis, cash basis. At the end of the year, the auditors perform that function that they do, and they make some adjustments to our books. Each year, our budget is a budget, I believe, that's basically on the cash basis. That's not what we do, but that's what we've been doing for the longest time. The auditor's report, to me, is really something that is kind of like your argument about the construction project. It's in the past. Basically, the auditor's telling us, you spent this amount of money, you categorized it in these kind of accounts, and that overall is appropriate. Now, the one item, should we be budgeting for the $2 million of something that never really is a cash in or a cash out to us? I don't really know either, but if we do, then we need to have a 20% fund balance to keep that there.
And I think that's the reason why you have school districts, since it's not a cash item for them, ignore that out of their budgeting, because then they have to consider that in their fund balance assessment. That's $540,000 of additional fund balance we would need to maintain in our fund balance. We would then have to looking at that 20% fund balance policy and start looking at that and saying, okay, now we go, how many more cuts would that be? We are on a monthly reporting cash basis. We do budget in an accrual basis. We report on an accrual basis. That report's on an accrual basis. That's one of the reasons why when we were putting the goals together, Kevin, I said, no, you have to adjust back that fund balance for that $70,000 or $80,000 that we showed as cash coming in this year, but we knew that because of accrual basis, it was going to get retroed back in for our audit, because that audit's on an accrual basis. We do report on an accrual basis. Our monthly things that we get in front of us are strictly on a cash basis. It doesn't make sense to go back and accrual in on a monthly basis. It just doesn't.
What do we do?
So when
you're
we're
an
budgeting,
expert on this.
so when we're budgeting-
What do we do when you say we report and we budget at the end of the year on an accrual basis? When you provide us the budget that we approved for this year, did you do it for the teacher salaries, for instance, to include all salaries going through next July, August, or September, whenever it is, into this budget?
Unfortunately, for the most part, he didn't put that budget together.
Whoever-
But the
But we-
teachers,
The teachers get paid,
Teachers-
all their pay by
We
June
don't,
30th.
Hold on.
The June bills for payroll are gigantic here because we fund them in the month of June.
We're actually losing money by not paying them in July and August, because we do lump sum payments,
And
5
that's
pages.
within the
Payroll-
budget.
Yeah, for the payroll for the certified staff, we pay them all of the remaining money that they're owed in May or June. So by the end of the fiscal year, they've received all their money. There is no accrual. There are districts that will pay teachers through July and August.
Right.
Those schools have to take that July and August payments, and the schools don't do it. The auditors have to make an accrual for those amounts in the audit, saying those are expenses, not in July and August, but they should be in June, because it's been earned in the prior year.
And what, is there anything else?
So we don't do that.
So we do it with teacher salary, we don't actually accrue, we pay them that way.
So for
Correct.
example,
We give them 5 pay periods in June.
Okay,
so for example, revenues. Tim gets a calculation that says state of Illinois is going to reimburse us for X per student. We calculate that out. That, he puts that in the budget. That's accrual, because we don't know whether state's going to pay us by June 30th or by September 30th or by December of next year.
Right.
Like IEA funds that we had gotten for last year. They budgeted last year. They didn't come in until August or September. They were retro back in for the report for the audit. That's accrual basis. It was budgeted in last year's budget, accrual basis. We, however, get our report from the treasurer strictly on a cash basis. To retro and to amortize certain things, it just doesn't make sense on a cash basis. On an accrual basis, on a monthly basis, you're looking at cash in and cash out. The big thing out of the audit is to say that there are no weaknesses of internal controls, there was no improprieties of where the cash was spent. That's what I was looking for out of that audit, to make sure that there's adequate controls and that the money spent were done correctly. And I didn't see anything about concerns over that in the audit.
And we as a board have directed them to pay less out of the impress fund whenever possible. And we've questioned it, why did you have to pay this or that? Well, the basketball referee was here today, he gets paid today, and he can't wait till the next regular board meeting, which is the second Tuesday after the month, to get his check in the mail from the treasurer. The majority of our money the check never leaves this building. It's written at another building. And so we've said as a board, why are we writing these checks? Why can't it wait for the accounts payable bills each month? And Kevin will tell you that he's gone in and directed them, if it can wait, it should wait. If it can't wait, we have to pay our bills.
Or the bigger picture is, what were the controls that, Tim, you put in place so that if they overspend in one line item in a department, they're not going to overspend overall in that department? Those types of things in anticipation of the future. That's so that we don't spend the monies, that we don't go over budget. And those are the types of things, put controls in place that weren't there. For example, Kevin came to us before the meeting and talked to us about certain things going on that he was able to, because of controls put in place.
Yeah,
So
these
are the kind of things.
And I don't talk too much about my work, but people hand me certified audits all the time, and they really don't mean a lot, because the first thing you do is you start asking, well, what's behind that? And you get the cash reports that the company has every month, and that's where you see the money go. You compare all the cash, then what's the line item on the report, what was the adjustment made, and was that proper? It goes back to most of what you're doing is all the cash flow in and out. And will we get all the tax money? I don't know. I think we budget something like we're gonna get 98%. There's no set rule as to how much of our tax revenue we're gonna get. We're at the mercy of the people who pay their taxes, which are due tomorrow or the next day. And then that goes into somewhere, Chase Bank or the treasurer's office. They slice out our piece. It gets to the treasurer's office. It gets posted to our account probably daily. And will we get 100% of the taxes that we levy? Usually not. Will we eventually get 100% of the taxes we levy? I believe so, because if you don't pay your taxes then are sold at sale, and at that point in time, we get the money, and then the homeowner has X amount of days or whatever under the law to reclaim his taxes to not lose his property. So there's so many variables in this kind of accounting that the best piece of evidence we're looking at is how much cash comes in and how much cash goes out And like Gary says, do we have proper controls in there to make sure that there's no improprieties with the money going out? Everyone who wants to spend money in this building has to fill out how many forms? Is it like two?
Yeah.
2 or 3?
2 or 3.
And it goes to an accounts payable clerk, it goes through the business manager, and they
Those-
input it into the computer at the treasurer, and it's not until the board approves it at the regular meeting that all the checks get mailed out from the treasurer's office, wherever that may be. So, you know, again, going forward, I'm one who would say that we don't really need to address a lot that's in this report. We paid somewhere between $15,000 and $20,000 for this report. I would wish we could pay someone to do this for less than $5,000, but since the state mandates we do this type of report, certified audit, we're at the mercy of the market out there, who will do it for what price. And if there's some typos in there or some numbers we can't find or something, they're probably most likely, in my experience, correct. Or the numbers behind them are going to be the cash reports that we see every month. We see every month we get how much, we get that report that's part of the budget report, which since 2 years ago, I've lobbied that we put it online as part of our meeting, and we show the public how much of our money is coming in and how much of our money is going out, and put that stuff out there so they can see. And so I would think we're going into this trying to get this next budget, and this board has the opportunity to put our stamp on this next budget going forward. Like I said earlier, what opportunities are we going to give to these kids? Where are we going to spend our money? What priority are we going to have? And then looking forward, where are we going to do it for the next contract and for the next few years? And I don't think going back to, I know you spent a lot of time and you have questions, but I don't think it's going to provide us any additional information to determine how many kids we're going to put in the classrooms or how many opportunities we're going to give the kids to go back and have the administration do any additional work on that. And that would be my perspective as one board member as to how much time we should spend additionally on this audit.
What would be the downside risks if nothing changed? Maybe it's an oversimplistic question, but I understand the risks of the distortions that you were describing, but if we didn't change this housekeeping in this modified accrual basis, so-called, what are the downside risks? What could happen to us?
Violating the state law.
The audit has to be prepared on an accrual basis.
Yeah.
So we have, the auditors have to make it accrual.
So we prepared it within the confines of the law. Yeah.
Gary, anything else?
What about me?
Anything else? Well, I'm said, you asked the finance, you keep on saying we have 2 CPAs on the finance council, and they're the ones that were looking at the audit and
I don't want you
reviewing
to
the audit.
edit, just like John, I don't want you to editorialize.
I'm
on
not
what I say.
editorializing right now, but
The
I'm
other
just saying right
question
now,
that I
these 2
had-
people came up. What's your other question?
Well, I want to thank those guys for their discussion, because I wasn't getting it.
Right.
I mean, it's helpful to have you guys like explain this,
And that's
especially
why we
Gary
have to
and
speak.
both of you. I mean, that's
What
simple stuff.
What about the appraisal, the $2 million difference in the value of the property?
I think what the auditor is talking about, he's saying that not that the appraisal is off by $2 million, but that the asset value at the beginning of the year that was done by last year's auditors in their audit was off by $2 million. And I think it, you know, as districts go through and update their assets, they're not doing appraisals every year. They're only doing appraisals every 3 years, 5 years, maybe even 7 years. When they did the appraisal, they identified more assets than the prior auditors had on the books. And so that's the adjustment he's talking about with the $2 million.
The net impact
It was reduced, actually they had more. They had more on the books then.
Because of the accumulated
Right.
depreciation.
So it really was.
What was that, Gary?
We
I
can't.
don't believe it was more assets. I believe
No,
the net
it was
impact
actually-
was, the fact is that you had 2 million of cost and you had
2.5
2.3 million
depreciation.
of accumulated depreciation with the net impact of increasing of 300,000,
Yeah.
300 plus thousand. And it's probably not very uncommon for an entity who didn't keep a fixed asset
Ledger.
roster to come up and lose assets and to over time to to miss things.
Would that
And that's
also-
why it was important to get this fixed asset appraisal with a fixed asset listing so that we can monitor and have things tagged, which we got done on this.
But that would be create more because of the fact of the building and everything else that we were doing? The new building and everything?
What happens in an entity like this, you know, you get computers in and out the door, you get,
Stuff thrown out.
That's
so
the,
I'm not saying that in that,
That's
but I'm
stolen.
saying over time, with the amount of, you know, chairs and furniture and fixtures and things like that going
For
in and
instance,
out.
we're missing a table here.
Right. You're exactly
And so
right.
then when we interviewed the auditor, they promised us that they could produce it on time. And with the money we saved, we also thought it was a good idea to get the appraisal, which then took forever. And I don't have any historicals about how long appraisals take, but the auditor says as soon as they got the appraisal, they finished their audit. He said if we're not doing that next year, it should be on time next year.
And we should hold them to it.
And we should hold them to it.
We'll make sure. I mean, we had a new personnel in there, and it's very difficult to try to look at historically and to try to find things from prior people. You had a new auditor. You had a fixed asset appraisal coming in that they promised they would be on time, which they came in late. I mean, there was a lot of things going up against this audit. That's not, that sounds like an excuse. It shouldn't happen. They're all professionals, but we'll hold it to the fire next year. We'll hold Tim to the fire next year.
That's right. Any other questions or concerns or things that need to be addressed? Okay, seeing none,
but on the, Kevin, what are you going to address the question on the revenue? That could be addressed today?
On the property taxes?
Yeah.
Yes, he's got a,
'Cause I don't know if this was the time, but I want to make sure.
Yeah,
it's addressed.
I think the property taxes, when the audit, or when the budget is put together last year, you're putting together a budget in May or June, and you don't really have the numbers of what the final tax levy numbers are going to be for that year until usually sometime in August. I think last year we received the numbers in September. So we didn't really know during the course of the year what our levy, how much money we were going to get from the levy. And I think what happened is that I've got this I can pass out. The amount in the budget, I think, is overstated over what it should have been, and I think the reason it was overstated is because, as I say, Chris didn't have the numbers when he was putting the budget together on exactly what it was going to be. But the sheet that I passed out is kind of a calculation of how we would determine what the receipts should be during the month of November. The first column is the 2010 tax levy, which is filed in December of 2010. That's the money that we're going to receive during calendar 2011. The first payment that we get on March 1st is 55% of the prior year, because the county doesn't know what the EAVs are going to be for the individual properties. They just automatically bill you 55% of the prior year, which is why the first payment is always due on March 1st, and it's always timely. When the November payment is just the balance. It's the balance of what they finally determined that the tax levy is going to be for the year minus what was received in March. So you can see in column C there, what I'm showing there is what I feel the budget numbers should have been for November, the receipts for what's considered the prior year, what we should have received in that November time frame for the tax levy, and it would be $1,506,000. What we've received through January is $1,112,000. I looked back over the past 4 or 5 years, and historically between January and June of each year, we receive about 2 to 4% more of the November tax collections. Okay, so we're still receiving money as we go through the course of the year. The bulk of it is obviously received in October, November, but we still receive money in December, January, February. Okay, so if that $1,112,000 goes up by 2 to 4%, we're going to be very close to that $11,506,000. Okay. Right now, we're running about 95%, 97% of where I think we should have budgeted. I think it'll be up closer to 100% by the time we get to June. And I think we'll get that. So we're gonna still be under by about maybe $700,000. But as I said to you last month, I think the refunds that we've budgeted are probably gonna be under by about $700,000. We budgeted $850,000 in refunds, and we're not gonna come even close to that. So I think in that sense, the difference in the budget on the receipts and the difference in the budget on the refunds should pretty much offset each other.
Okay, any other questions?
And a couple of years ago, we never had a line item for those receipts. So, you know, a couple of years ago, the board asked that that line item be put into there so that we can, you know, at least try to anticipate money that's gonna come right off the top for prior year taxes.
Okay, anything else?
Thank you, Tim.